You are looking at a retail anomaly. In a world where mall brands are dying a slow death, American Eagle Outfitters is thriving. But if you look closely at the documents we have analyzed today specifically, the Q3 2025 report, you will realize that investors are often buying one company, but getting two very different businesses. You have American Eagle, the steady, profitable denim giant. And then you have Aerie, the high-growth, explosive engine that is redefining the intimate apparel market. Today, we are going to dissect the investment thesis for AEO. We are not just looking at the clothes on the rack. We are looking at the real power, real growth, strategy that has driven their operating income to $112 million in the third quarter of 2025. We will analyze the Power of People Profit Improvement Program, the logistics revolution with quiet platforms, and why Aerie's offline brand might be the next billion-dollar opportunity. By the end of this video, you will understand why AEO is more than just a jeans company. It is a masterclass in brand portfolio management. Part 1, the Aerie and offline growth engine. Let's start with the crown jewel Aerie. For years, Victoria's Secret dominated the market with a specific, narrow definition of beauty. Aerie disrupted that entire model with body positivity and comfort. But in 2025, the story shifted from disruption to dominance. The filings highlight a strategic push, the opening of 45 to 50 new Aerie and offline stores in fiscal 2025. Why is this significant? Because Offline by Aerie, their activewear sub-brand, is capturing the athleisure market, just as Lululemon did a decade ago, but at a more accessible price point. The financial data shows that while the core American Eagle brand provides the cash, Aerie provides the growth. It is the classic cash cow and star dynamic from the BCG matrix. Part 2, the core foundation, American Eagle. Now, let's talk about the foundation American Eagle. It is easy to overlook the legacy brand, but that would be a mistake. American Eagle is the #1 jeans brand for Gen Z. In the 2025 financial reports, we see a disciplined approach. They aren't aggressively expanding the store count for AE, planning only 5 to 15 new stores. Instead, they are maximizing profitability per square foot. Look at the gross profit numbers from Q3 2025, $551.9 million, up from $526.6 million the previous year. This 5% increase in gross profit, despite a challenging retail environment, proves that their pricing power in denim is intact. They don't have to discount heavily to move product because the jeans has built a fiercely loyal following. Part 3, the hidden asset, supply chain and quiet platforms. The third pillar of our thesis is something most retail investors miss: logistics. AEO acquired quiet platforms to revolutionize their supply chain. In the past, supply chain was a boring cost center. For AEO, it is a competitive weapon. By regionalizing their fulfillment centers, they can deliver packages faster and cheaper than their competitors. The profit improvement program mentioned in the 2025 filings is largely driven by these efficiencies. They are reducing delivery times and shipping costs simultaneously. In an era of inflation, where shipping costs can eat up margins, this vertical integration of logistics protects AEO's bottom line. It allows them to maintain that healthy 40% gross margin we saw in the latest quarter. Part 4, financial health, cash and dividends. Finally, let's look at the balance sheet. AEO is a financially disciplined company. The Q3 2025 report shows a solid cash position and a commitment to returning value to shareholders. They continue to pay dividends and execute share repurchases. Net income for the quarter rose to $91.3 million, up significantly from $80.0 million in the same period last year. This double-digit growth in the bottom line confirms that their strategy of controlling costs while expanding high-margin brands like Aerie is working. Conclusion, the verdict. So, what is the verdict? American Eagle Outfitters is a rare breed. It offers the stability and dividends of a mature value. Stock through its American Eagle brand, combined with the high-growth potential of a growth stock through Aerie and offline. They have mastered the supply chain. They own the Gen Z demographic, and they are generating serious cash flow. For the investor looking for a balanced play in the consumer discretionary sector, AEO represents a compelling best-of-both-worlds opportunity.